The last month and a half on the market has been absolutely brutal. And so the question on everyone's mind is it going to keep going down? Do we bounce? If so, where? So let's start off by looking at the last 6 months and see where our recent support and resistance levels are. So as we can see, we did have some resistance that we ran into around the 416 range. We also had some support that developed around 390, and that support later turned into resistance on some of these moves. We also had some support around the 372 range, and ultimately the 362 range. What we were looking for here was a bounce off of the 362. We were hoping that this would develop into a double bottom. And what happened was on Friday, we actually cut right through this. And a lot of that was thanks to Apple and their warning. But the problem is, Apple is more than just Apple. Apple is an entire industry. And when they cut back on purchases, it means that they're not ordering chips, they're not ordering as many lenses, they're not ordering as many little touch devices, video cameras, all the things that go into it. So when Apple warns and pulls the market down, it really pulls the market down. And so we really want to think, okay, what comes next? And unfortunately, it looks like the MACD here can turn down again. It looks like we have some room on the RSI to fall for yet another leg down. And so the next question is, where does this stop? And where do we get this bounce? I don't think it's going to be in the next couple days, but it might be soon thereafter. And the first thing we have to do is zoom out. Here we're looking at a 3-year chart. And one of the things that stands out to me is our volume indicators here. So this volume indicator, the VRVP, what it shows us is how much trading occurred at various price levels. And one of the things I'm noticing here is that we do have a gap, an air pocket here. Basically an area where the market rose quickly, there wasn't a lot of participation, and anytime I see one of these air pockets like that, I get a little concerned that we're going to slice right through it. And a really good example of that recently was Amazon. There was a lot of trading in this price range down here. Lots of support and resistance was developed. And then we quickly rose at the beginning of the pandemic to this area, and then we developed a lot of support and resistance up here. And the thing is, when the market did decide to go down, when Amazon went down, it cut right through from 150 down to 100 in the course of about 2 weeks. So these air pockets, they can be dangerous, and we need to be aware of them. And I'm thinking if we're going to have the market stop at any number, I'm thinking 338 is the area to look for. We might have a slight bounce off of some of this prior support over here at 350, so we might see it bounce up a little bit. But ultimately, I think we're going to tag that 338 number before we see another bear market rally like we saw here earlier. And that 338 number is also very important because if you look way back over here, that is where we stopped just prior to the pandemic. And so this resistance here, the start of that event, I think is going to be our first strong level support. Likewise, we have this air gap in the volume at price, and I think the fact that there was a lot more trading in this price range, this is going to provide at least near-term support. But it's not all doom and gloom. There are some rosy parts of the market. One of them is Workiva. It's been rumored that Thomas Bravo may have interest in the stock. It is trading above the 200-day moving average as of a couple days ago. And one of the things I like is on the weekly chart here, it got over the 200, the 9 and the 21 weeks are about to cross, the RSI is rising, and there's a TM squeeze that has developed. So zooming in on the daily chart, you'll see how this has developed some strong support. And I think this is a good swing play. It also has potential of a buyout. So there you go. Let's see what happens. Another swing trade that I'm looking at is PBF Energy. It is in this wedge. It's consolidating, and typically with these wedges, you get to about 70-80% of the way to the apex, and it'll pick a direction, either falling out the bottom or falling out the top. And when that happens, basically you'll see something like this. It might bounce up, down, in here. It might pop out, and then what you're really looking for is the retest and it coming off of the retest. So here, let's see if I can just draw that real quick. So if this comes down and we test the bottom and top, and let's say we come and poke through, that is where you want to pay a lot of attention. But what you're really looking for is for it to hit this part of the chart again and then bounce off. And this right here, this is where you buy. So keep an eye on this chart. I'm looking for a swing trade here to develop to the upside. I think going into winter with the energy crisis that's developing in Europe, there's a good chance that this energy play will snap out of this chart and we'll see higher highs. Another stock I'm keeping my eye on is McDonald's, and there's a couple reasons why. One is it has pulled back viciously in this market downturn, and I say I'm keeping my eye on it. We're not going to get in yet, but as the market keeps going down, potentially, this is in an oversold territory. It is in one of the buy zones, according to the Lux algorithm. And what I'm waiting for is our Williams crash detector here to stop being green. So the first day where I see a close and it's gray, that'll be my buying indicator. So, we saw that work really well in this last crash. The first gray day basically was a wonderful point to buy this stock. Again, recently, first gray day after close, perfect time to buy, and I'm thinking we're going to see that behavior again with this indicator, the Williams crash detector. So keep an eye on McDonald's, and we will, when the market turns around and we get that first gray bar, that's the time to pull the trigger and either buy some McDonald's or maybe even put on a short put spread. So what else? If you have any questions about this, by the way, this is the Lux Algo, and this trading software is called TradingView. If you want to learn more about either, there's information in the description below, so check that out. So that's all I have for today. A few stocks that we want to pick up when the market turns around, and then big picture. Market's getting close, I think, to a near-term bottom. We're probably going to go down for a few more days, hit some of those numbers we talked about earlier, and we're probably going to have a bear market rally after that. So that's what we're looking for. It's going to come down, tag those numbers, and then we're going to have another bear market rally. And that bear market rally might even come and tag all the way up and tag up here. I don't think the market's going to pull out of this channel until the federal funds rate stops going up. So when Jerome finally decides to say he's done raising rates, that's when we might be allowed to break out of this channel. But I don't think we're going to break out of the channel until the Federal Reserve decides to stop raising rates. So until then, just keep swinging.